Hello. So, what are we talking about today? We are talking about what is AutoClimate and what is AutoUFOs. Let's go ahead and go over these materials with a bit more detail and some visual demonstrations so the concept and the tools will be understood in a more precise manner. First of all, in the bottom part of the screen, we can see something that looks like a histogram, even though the really important part is the dots, which could be either blue or red. This is AutoClimate, and this is a tool designed to present what is the current climate in the marketplace from a statistical point of view. This tool, like all tools we produce, are intelligent. They use a lot of market data. There is a lot of processing happening behind the scenes to produce statistics that basically suggest what is a smart action in the market. In this case, which one is the right side of the market in which to trade, going long or going short. The blue dots in this case would identify long as the right choice, where the red dots would identify short being the right choice. Having said that, this is not where everything ends because direction is very important, but most importantly, sustainability of such direction is even more important. In this case, this is just an example using a 4 hour of gold futures. We can see how the current extension of this market is currently pointing at 2.54, where statistics suggest a two standard deviation of a max distance would be 161. In other words, and this is ATR multiples, and in this case, because 254 is more than 161, but basically we are in front of a situation where while the direction of the market is clearly up, statistically speaking, it is not sustainable. So that would welcome counter trend traders to enter, where a few candles ago it would have been great opportunities for trend traders to actually enter the trend when those values of extension, max distance, count, etc., were in a lower level in the histogram with those blue dots. Those would have been good indications to go long, and if AutoClimate was to show red, then to go short. AutoUFOs, which is the other tool we are discussing, can be seen on the upper part. They look like flying saucers. That's why we call them UFOs. The other reason, the real reason, though, it's because UFOs stands for unfilled orders. Let me write it down, unfilled orders. That's what UFO means. And auto UFOs means that the tool will identify automatically unfilled orders to buy or sell for all markets, all time frames, directional trading, non-directional trading. So let's take a look at a currency futures, for example. I'm going to be looking at Euro futures in the CME, just to pick one. Let's pretend you are an intraday trader because I was using a 4 hour time frame. So let's move now to, let's say, 8 minute time frame, just to pretend you are an intraday trader. And notice how automatically those red and green flying saucers show up in the screen. Green UFOs represent buy unfilled orders. That's where you want to buy yourself. Red UFOs suggest sell unfilled orders. That's what you would want to sell yourself, or also exiting a trade if you're long, or the green one exiting a trade if you're short. Again, auto UFOs are used to plan entries and exits both. They could be, by the way, combined with other trading techniques. Maybe you happen to be a Fibonacci trader, just to pick an example, and you were drawing your fibs here and you didn't know which one to take. Well, obviously, if you wanted to short, it seems that the 78.6 would be ideal because it's lining up with two UFOs where the other fibs are not lining up with any red UFO if you wanted to short. If you wanted to go long, it looks like definitely this one here, the 50%, would be ideal as it is being enveloped by those UFOs as well. So in other words, you could utilize both AutoClimate or auto UFOs by itself, or you could utilize it combine with other trading techniques as a complement, or as your main tool, and use another trading technique as a complement. Again, all of this is user discretion, if you wish. I'm gonna go ahead and look at an example here. I'm just gonna use the replay functionality of TradingView in this case, just to give a little bit of visual action. So this is understood how this is dynamic. So going back in time, if I was to replay the UFOs, starting at the moment in time, you can see it went into the green. From there, started going higher. got into the red. From there, did a little bit of a reaction to the downside. Not amazing, but then let me see what happened there. We got some green showing up. So we were, as you can see in the bottom part of the screen, in a blue climate, hence the market was going higher. But now this blue climate was overextended, so I would expect that red UFO to really push hard to the downside, exactly. And we had a change of climate now, with a climate being a red color. So again, as you can see, those UFOs could be used for entries and exits. Another opportunity to short with another red UFO that showed up. Careful there with a green UFO, but again, within the context of a red climate, and we just reached the end of the chart. But anyway, hopefully I made my point that combining AutoClimate to know in which direction to trade and using AutoUFOs to set entries and exits, it's certainly a powerful way on how to trade. Now, from a performance point of view, all of these could be adjusted based on calibration settings that have to do with user preferences. In my case, I do use Fibonacci values in many things I do in my trading. So here I'm using the golden ratio as a calibration. By default, it comes with 0.5. Calibration goes from 0 to 1. The lower the number, the more UFOs you're going to get, the lesser the probability. The higher the number, the less the UFOs you're going to have, and the greater the probability of success. So if you look at 0.5, for example, and you show stats, take a look. Let me compress this. And I just did it backwards. I wanted to compress the upper part of the chart so we can see that 59% on the upper part. So this is the UFO performance stat. You would expect 59% of the times when price comes to the green to bounce and go to the red, or when price goes to the red to bounce and reach the green. So this is happening 59% of the times with this particular calibration. As I said, changing calibration settings is going to make this to be more aggressive, less aggressive. So if I do 0.3, for example, notice how the statistic changes to 47%. So the number is worse, but you do have more UFOs overall, meaning that you have more opportunities to trade, even though they are of a less quality. If you go for a little bit of a larger number, for example, 0.7, so now we're going to have less UFOs on the screen, but with a greater number, 63% in this case. So again, this is user preference. If you want to make yourself more conservative, less conservative, this is my preference, golden ratio. Again, it doesn't mean anything. But the beauty is that now, not only you know what to expect from your trading methodology, on top of that, if you were to change market, and let's say you go trade crude oil futures, and let's say you never traded crude oil futures, you always only traded the Euro futures or S&P futures, and now today you're going to start trading crude oil. So next thing you know, the moment you change to crude oil, you get this measurement, 63.92%, which tells you, well, you know what, the reliability of this market is similar to the other market I was trading, which is, in this example, Euro futures. So you know what to expect. Another thing would be to trade non-directionally. So let me go back to my original settings of 0.5, just because this is what comes by default. Okay, and let's say, for example, you trade iron condors on high volatility stocks, and therefore you are interested in doing non-directional trading with Tesla, to pick a stock. And let's say you are looking for big moves in the market, such as this particular gap. There was a gap a few days ago right here. So let's pretend we are looking at the market when the gap took place, and you want to set up some sort of an iron condor at that moment in time. So what you could do is that you could look at what's below and above from a UFO point of view. So you have UFOs up here. You have UFOs down here. I would even go here just to make it kind of like equal distance. Sorry, I need to click here. So the current price, okay, the location where the current price is, which is right here, it's kind of equal distance from the upper and the bottom black line. Now, the most important part is that you got UFOs above and below. In other words, if Tesla was to reach the red UFO, it would likely go back down. If Tesla was to reach the green UFOs, it would likely go back up. And therefore, the probability of staying in the range for a while is very high. So you can do your, credit spreads above, credit spreads below, non-directional, iron condor, short strangles, iron butterflies, broken wing iron butterflies, whatever is it that you do as an options trader. And now, let's fast forward in time and see if Tesla stayed right there. And as you can see, actually, exactly what I said. Let me close the replay. Exactly what I said has taken place, where Tesla went to check where the upper UFO was, and from there started falling down, increasing the time for price to spend in the range, and therefore the time decay and the collection of theta and all of those things as options traders. So again, AutoClimate, identifying the right side of the market in which to trade based on statistics, probabilities, and also, most importantly, apart from direction, we measure sustainability. Is it an uptrend, but you are late to the party? Or is it an uptrend and there is still room for the trend to keep developing? That's a very important question, very easily answered by AutoClimate in the form of blue and red dots. Easy to read, easy to implement, saves time, objective, mechanical, no biases, no emotions, etc. And then on the top, we have the UFOs, green for buy unfilled orders, red for sell unfilled orders. They can be used to set entries and exits, or entries only, or exits only, depending on your trading plan, directional or non-directional, depending on your style. It applies to any time frame. So again, if I look at S&P futures and I want to look at the 15-minute time frame, so you just go S&P futures, 15-minute time frame, 1, 2, 3. Here are your UFOs. You know where to buy, and above, somewhere above, we should have, well, actually, yeah, of course, this market has been going higher for a lot, so there is nothing fresh up there, which is a sell order. But let's look at any other market, for example, gold futures, and let's say you are looking at the 2-minute time frame. It doesn't matter if it's a large or a small time frame. The tool is intelligent, and therefore automatically it's going to report to you where are the buy and the sell orders, which you could then calibrate, adjust your probabilities, and trade. So entries and exits, precision, saving time, and also, very important, the fact that you could use that by itself, or you could combine it with other trading techniques. Maybe you look for confluences with moving averages, or pierces of Bollinger Bands, or you are a Fibonacci trader, or maybe you are just a value investor and you are looking at weekly timeframes of McDonald's, and you just want to find out where do I want to sell a put to get a McDonald's put to me on a weekly time frame. And guess what? The 270 put is the one you would want to sell, because this is where the buy orders are. Okay, so very, very simple, powerful. And also, I didn't say, but we have this technology available in multiple platforms. I used TradingView for this video, but it could be other platforms apart from customized integrations with different brokers or platform providers. I hope this helps. Thank you very much. Bye-bye.